So if you look at the last 30 years of data, self-storage has actually had the highest return compared to any other asset class. So for example, over the last 30 years, the S&P 500 returned about 7.5%. Multifamily did a little bit better at about 13%.
Mm.
Self-storage was at 17.4%. So now that 4% doesn't seem like a lot, but you got to realize that's compounding year over year. So if you had $100,000 to invest 30 years ago, if you put into apartment buildings, you'd have about 1.7 million today. If you put into self-storage, you'd have a little over 4 million. So double the return of what you'd have in apartments. Now people say, well, okay, if the return is so great, that must mean that the risks are also, commensurate to the returns. And actually that's not the case. So if you look at the last two major recessions we went through, 2007 to 2009, self-storage only dropped about 3.5% in value, whereas the S&P dropped 22%. Multifamily dropped about 7 to 8%. And then if you look at the most recent recession, which is the pandemic, TREP, which is a commercial mortgage-backed securities research firm, found that of the 1,700 CMBS loans that were made to self-storage investors in the first 3 quarters of the pandemic, only 3 were delinquent. That's a 0.17% delinquency rate. During that same time, multifamily was defaulting at a rate of 1,800% higher, or 18 times the default rate of self-storage.